that kind of historical funnel that you had where someone would buy Bitcoin or ETH on a centralized exchange, then eventually go down the rabbit hole to different alts. Now it's a totally different onboarding process.
Welcome back to another episode of Mick and Mike. We've got the House of Representatives that officially passed one big, beautiful bill. It's been a few days since this passed, but what are your thoughts on the big, beautiful bill?
Outside of all the political things that the big, beautiful bill is taking away from Medicaid and all that kind of stuff, like we'll leave that stuff to the side, but let's focus on the potential impact on the crypto markets. First of all, the deficit. The deficit looks like it is going to increase, as it has been forever, it seems, 3 to 5 trillion over the next decade. Now, what does that mean? I think this means that we're going to need money to pay for all this stuff, right? And that means that the money printer is likely to go burr to inject additional liquidity into the financial system. And then that usually has benefited risk assets like cryptocurrency. We kind of saw what was happening during the COVID era, where there were printing lots of money, and then at that time Bitcoin hit an all-time high, and that was really fun, right? I think on the other side, there looks to be some big tax cuts coming. That's going to be likely increase disposable income for households and small businesses, and that could lead to more retail investment into crypto, right? So kind of combining this additional liquidity and then tax cuts lead to more cash in hand. That's a pretty good combination for typically for risky assets like crypto. Kind of moving over towards just the overall narrative of Bitcoin, created by Satoshi as a reaction to all the quantitative easing back in the bank bailouts back in 2008. We're looking at this national debt increasing, money printing, and now Bitcoin is sound money, decentralized. You don't have the Fed essentially just printing money at will. So that narrative will likely continue, and maybe we can see more interest from both retail and institution for the hardest money around. But I think all of those are kind of theoretical. I think we're just going to see a ton of volatility here, right? We've got all these levers happening. We've got this increased debt. We've got potential inflation. You've got still a lot of uncertainty out there, with tariffs and those deadlines coming up very soon. Who knows what's going to happen? I think it's going to be super, super volatile. Great for traders. And maybe long term, if you're not thinking about short term price, long term you're going to sit pretty. But yeah, I think we're going to see a lot of volatility.
Those of us in the industry, those of us that believe in Bitcoin, that buy Bitcoin, do it because we know that regardless of what's on the news, eventually we get to a point where the money printer turns back on. So that's a given. I mean, the writing's on the wall on that. The one area where I'm not so sure of is its impact on all the other digital assets, right? All the altcoins that are out there. Because traditionally, if you look at what happened during COVID, yes, once that money printer turned on, the money made its way to retail. And then retail, what do they do with that extra money? They bought crypto. And then that really sped up the process for altcoin season. I'm not sure if that's going to happen this time around. I mean, I don't want to put a wet blanket on the situation here for those of us in the industry that are expecting an altcoin season. And look, I want it just as much as everybody else. But my concern is because of this rapid inflation, we're not going to see a decrease in the interest rates. Why would Jerome Powell decrease interest rates if inflation is about to go through the roof? And so are we going to see that type of volatility, to the upside? I'm not so sure about that, Mike.
Yeah, I mean, I don't know. I don't know if it'll be, I think it'll be both. The volatility, it's going to be a roller coaster, I think. But to your point of altcoins, I agree. I think this is such a different environment than it was 4 or 5 years ago, when the similar, at least, quantitative easing environment that we are expecting from this big beautiful bill comes around. Yeah, I mean, just the exposure that people have to crypto is so different now than it was back then. You've got so many more ways of getting exposure through TradFi and the public markets than you did in just like going directly to the buying crypto on a centralized exchange. Now you've got the ETFs, you've got the crypto treasury companies. So that kind of historical funnel that you had where someone would buy Bitcoin or ETH on a centralized exchange, then eventually go down the rabbit hole to those different alts. Now that it's a totally different onboarding process where you can get Bitcoin and ETH and now many others through an ETF or through a crypto holding company or some other fashion where that kind of interest in the other alts, I think, almost gets bypassed. So yeah, it's tough to say whether or not we will have an alt season. If we do, it's just going to be so different than the ones we've seen in the past.
And to your point, this cycle is looking very different from previous cycles. And a lot of that has to do with TradFi coming in, companies putting crypto on their balance sheets, companies like Coinbase and Robinhood that are rubbing elbows with the TradFi folks. And Robinhood is in the news. We'll dive into that. And then also projects that are currently doing fundraising, we'll also check in on that. Let's touch on this story, Mike.
Yeah. So on July 4th, I don't know if there was some symbolism there, but more than $8 billion worth of Bitcoin from the Satoshi era wallets was moved in the largest transfer on record. So there were, like you said, eight wallets that had been dormant for 14 years, each holding about 10,000 Bitcoin. Transferred their funds to new addresses. We don't know what it is. They were all the on-chain unearning systems like Arkham. They don't know the identity of the wallets, but they know that these are very, very old wallets that had been dormant for since 2011. Some have speculated that it is Roger Ver, who is now very, very closely linked to Bitcoin Cash. But I think most people think this is just like moving coins from these old school wallets to modern SegWit addresses that now are more secure, more efficient. There's lower fees to use them. There's plenty of conspiracy theories out there. Some say they may link to a hack or compromise private keys.
I've heard that one as well, Mike. On that note, phishing attacks is like we talk about smart contract exploits. Like if you look at Q2 of 2025, you have more phishing attacks than you do smart contract vulnerabilities. So it's on the rise. So it's not out of the realm of possibility.
It could be. Some say that it's some kind of like government settlement. I don't know, massive amount of money. What seems to be the consensus is that it's not, doesn't seem to be a preparation to sell, right? These didn't move to a centralized exchange wallets. They just moved to other non-custodial wallets. So still kind of a mystery. Don't know who it is, but it seems that right now it is not going to be like a massive sale. So
yeah, we can breathe lightly. Meanwhile, Mike, Robinhood, we always talk about tokenizing stocks, RWAs. I mean, this plays right into that narrative here. Robinhood launches tokenized stock and perpetual futures trading in Europe. This whole Robinhood collaboration with Arbitrum, I actually heard about this at the GDC conference like over a year ago. That's how long it took to actually create this partnership. I believe this was officially announced at ETHCC, this particular piece of news. Another step towards bridging crypto and TradFi.
Yeah. Robinhood announced tokenized versions of about 200 US listed stocks and ETFs for European customers only. So these tokens will be initially issued on Arbitrum's layer 2, but with plans to migrate to Robinhood's own L2, which is built on Arbitrum in the future. Then there was some controversy around that. Like their offering includes like tokens, tracking private companies like OpenAI and SpaceX. So derivatives of these stocks, these are not public stocks, right? So
Right.
OpenAI publicly condemned them, saying, yeah, these tokens do not represent actual equity. They were not authorized and do not, confer shareholder rights. Like I mentioned, they're derivative contracts. They mirror the share prices, but don't provide ownership. And liquidity is pretty low now in the beginning. But this is kind of one of the things where it's like, if you have kind of this synthetic instrument, this derivative instrument, there's kind of a lot of like legal, ethical questions with the actual stock ownership, and what do these derivatives actually represent? But right now, they certainly do not represent equity in these companies. And they're doing some work. I read they're working with like Carta, who maintains a lot of cap tables for these for these startups, to kind of get like accurate pricing and like Oracle data. But yeah, as of now, this seems to be just kind of like a regulatory arbitrage, a little bit with this offering on Robinhood's part, and yeah, certainly does not represent the actual true ownership, like a true tokenized stock, but rather just a derivative.
I'm curious to know, is there going to be a product, or perhaps maybe this already exists and it's very much open to the public, where you can track and check the legitimacy, or do we just, say it's Robinhood and we just take it at face value? I don't know.
Yeah, I mean, you got to verify that, right? Like that's obviously a very important part of these instruments, right? If you're looking to own, if you're looking to trade these, you better be sure that the price data, what it represents, what these instruments represent, like you better know what you're investing in. Yeah, right now it's kind of clear on what it does not represent. But I guess unclear what it does represent. So I think you gotta make sure that you know what you're investing in or what you're trading. But we just got to see what happens, because obviously I think when someone like Robinhood comes in and pursues this, it's obviously something to pay attention to.
Well, when it comes to those products, I know you have a very good finger on the pulse. You're one of the most trusted VCs that I personally know. And every time we have this episode, Mike, you always bring to me three projects, which I believe today is four. You're giving me an extra bonus one,
Mm-hmm.
that are completing successful rounds. And let's start with the Open platform, which becomes the first ton unicorn following 28.5 million raise. And I've heard a lot about Ton. They obviously stem from the Telegram team, which is a Web2 based application that a lot of folks in crypto use. And so I know there initially was a lot of excitement around Ton. It kind of died down a little bit, but I mean, it sounds like they're making noise again with this big raise. What can you tell us about it?
Yeah, so the Open platform, or TOP, yeah, they raised 28.5 million in a Series A led by Ribbit Capital, with participation from Pantera. And yeah, they build apps on Ton to integrate crypto into Telegram's 1+ billion user base, and its primary product has been its Ton's most popular wallet, called Wallet in Telegram. So they're gonna use this capital to expand into the Western markets, enhance regulatory compliance, and also incubate other Ton-based projects. So yeah, like you mentioned, like Ton was super hot for a while. A lot of the kind of mini apps were, kind of those tap 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 apps were very popular in the beginning. Yeah, I played with Notcoin for a little while, but yeah, it kind of fell off a little bit, like when the markets fell off. But it looks like there's good progress, and it's coming back. We talked about distribution with Robinhood, right? Like that is such a key aspect of a blockchain protocol that you can have. And obviously with over 1 billion users on Telegram, because of that, the apps that you build there are a bit different, and the UX is within Telegram. So you've got some constraints there. But again, once you figure that out, once you figure out that UX, that onboarding, you've got that 1 billion user base that is a massive advantage for the Ton ecosystem.
That's definitely the key. I feel like, where they position themselves in a place that's different from any other ecosystem, which is the access to over 1 billion users that are using Telegram. That's kind of what gets me excited about the traditional route of getting into crypto. We talked about the other way that's happening these days through TradFi and stocks that are putting crypto on their treasuries, but this is like
Yep.
the way that I think makes most sense for us that are very much rooting for Web3 in this industry.
Yeah. Yeah. So to that point, right? You kind of think of like the onboarding system, a typical onboarding process, right? It was like wallets, right? Wallets was typically the gateway into crypto. And whether that is a kind of centralized exchange or like the or browser extension, MetaMask, or a mobile app like Coinbase Wallet or other wallets there, and then you kind of think about it like the browser, right? Like you've got these wallets as browser extensions, apps run on browsers, and how is that shift? How can the browser become with wallet abstraction, account abstraction on the back end? How can the browser become a primary path for onboarding users? And then now you got Telegram, the apps, these mini apps, very very different user experience, but captive audience in a very large captive audience in the Telegram app. So yeah, different ways of onboarding new users. Like I said, I prefer these kind of more crypto native ways of going direct to the user instead of having some TradFi financial instrument be the onboarding process, because I think you get the real experience and you get more
Right.
deeply integrated users when you go the more crypto native way than just an investment vehicle.
Agreed. And one of the narratives that's been heating up recently has been around prediction markets. We
Yep.
talked about prediction markets before, Polymarket, and then I believe it was Kalshi that made headlines as well. They
Yep.
secured funding. Now we've got more. It's Limitless.
Yep. The
They are
limitless.
prediction markets.
Yeah, the largest one on base. So, yep, they raised 4 million in a strategic round from Coinbase Ventures. Makes sense. Maelstrom, Node Capital, and others, and then XO Market, another prediction market. This one is a sovereign built on a sovereign rollup secured by Celestia. They raised 500K from Cyberfund, Delphi, Nick White, one of the founders of Celestia, and others. And yeah, like you said, I think it was just the last week's episode we talked about Kalshi raising a big round at a $2 billion valuation. Polymarket is in the midst, I believe, of raising around at a $1 billion valuation. These prediction markets got extremely popular during the election in November, and they're picking back up.
Yeah, these prediction markets, I have a feeling they're going to get pretty wild. I was talking to some guy that's working on a prediction market for Rotten Tomatoes.
Well, how does a
I
prediction
guess
market?
you,
Yeah,
depending on like if you think it's going to score high or low, you know.
yeah, okay,
So
yeah,
if you
yeah.
want, I'll set up a meeting. You can have a conversation.
I
Moving
mean,
on, Mike.
yeah, yeah. I mean, that's kind of the. I mean, look, I hung out with a bunch of my buddies this weekend, and we were placing sports bets, and we were betting each other on stupid arguments and things along that line. So like that, human behavior is, naturally everyone's got opinions, and they've got their prediction on what's going to happen or what's not going to happen, and a lot of times these bets get done over just a handshake, right? And but now we're just institutionalizing human behavior on on blockchains, and it's kind of natural progression of things.
And I will say that it is a great way for people to get exposed to specific topics. So if somebody's never been into politics and they're wanting to get more involved, that's a pretty interesting way of getting involved.
Yeah,
Moving
I
on.
mean, look at how like fantasy football, fantasy
Yeah.
baseball, fantasy sports, and season, whether it's season long or daily, that got a lot of people interested in these sports more than ever before, just because you've got skin in the game. You've got
Hands down.
you've
Yeah.
got money on the line. It makes you pay attention a bit more. And very similar effect to any topic that's out there, whether it's politics, sports, or pop culture, like you're talking about, the Rotten Tomatoes one.
Yeah.
So anything. This could increase in interest in any topic out there when you got skin in the game.
Last but not least, Zephyr Network. So this is a ZK computing layer for trustless AI agents and large dApps.
Um, this is it's a trust layer. So one of the things that blockchains I think are great at is verification, right? And with the AI trend, with agents everywhere, models everywhere, the verification of the integrity of these agents, the data these agents use, um, and just increasing transparency around that is, I think, is super important. That's where Zephyr comes in. They raised a $7 million round from UOB, Signum Capital, with participation from Hashkey, Cogitant, and some others. So they've got this thing called proof of prompt, and that's what they use their infrastructure to do, this certification and verification of the AI agents, making sure that the data that's being used there is private and transparent. And they've got these, with this verifiability, it's one of the most important aspect of the AI age. And this is the space that Zephyr is playing on.
I had Mark from Ifani like a few episodes back. We were talking about SIM swap
Mm-hmm.
fraud and how
Okay.
easy it is for people to call in and just AI generated voice to replicate
Yep.
how you sound. I mean, do you think this technology is capable of being able to help companies like, I don't know, T-Mobile, AT&T to decipher if this is an actual customer or not?
It could, and I'm curious. It's I wonder if Zephyr is in that space, but um, there's certainly a play where DID plays into it as well. But like, if you are able to verify that certain pieces of content was created by you. So let's just say, like, we've got some kind of DID for the Mick and Mike crypto show, and we can have a proof that says, look, we recorded this episode. Right now it's Monday morning around 9 a.m. Eastern time, and boom, we verify that on the blockchain. And uh, you know, and any other spoof or any other AI copy cannot be verified, because because our keys have verified that, right? So similar to your example, I think certainly there could be something in the process of creating those calls. A lot of companies do robocalls, and not all of them are malicious, right? Like, some of them are legitimate, especially if you've interacted with that company before about your contract or whatever it might be, a product that you bought. So yeah, finding a way, being able to verify that came from the company is something that is super super important. And to tell you the truth, I don't this might be one. It seems like Zephyr is playing in this space, and maybe in a not particularly to the example that you're talking about, but yeah, certainly in that kind of that verifiability, and making sure that we're able to verify that, and essentially put a stamp of approval that this content was created by the rightful owner is something that is going to be massively important.
And this just proves the use case of blockchain technology, that it's not all about altcoins that are pumping and dumping. There's real tech being built here for the common good. And that's a good stopping point right here, Mike. And for those that are watching, if you found this video helpful and educational, please support the Network Spotlight community by liking the video. We are really trying to ramp up this community, trying to bring more folks together to connect people that are in Web3. And also check out Mike's Deep Venture newsletter. He puts it out, every Friday?
No, once a month.
Once a month. Okay, but you put out your tweets every Friday. So follow Mike for the funding rounds every Friday. All right, that's all I got. Thanks so much for joining, and we'll catch you guys on the next one.
See you, everyone.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.